This is all about Bitcoin, a show dedicated to all things questions and markets related. Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's check in on Bitcoin. The Coindesk Bitcoin price XVX index is currently at $41,820. Bitcoin trading pretty flat, though slightly up, about 0.3% for the past 24 hours. The rest of the crypto markets are trending downward. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data. So taking a look at some of our top stories moving markets right now, Grayscale Bitcoin Trust, the discount has widened to a record low at 26.5%. Analysts don't expect a spot Bitcoin ETF conversion anytime soon. And in the meantime, investors in the GBTC fund are getting charged fees. Grayscale is a sister company of Coindesk. Meanwhile, Google's hiring PayPal veteran Arnold Goldberg to run its payments division as part of a push toward crypto. Bloomberg reporting this is a change of pace after Google previously retreated from a push into banking. Google has also partnered with Coinbase and BitPay to store crypto assets in digital cards while still having users pay in traditional currencies. Finally, the vice chairman of the European Securities and Markets Authority has called to ban proof-of-work crypto mining in the European Union, citing environmental concerns. The ESMA executive telling the Financial Times that, by contrast, proof-of-stake has a significantly lower energy profile. Proof-of-work is the tried-and-true consensus mechanism used by Bitcoin and Ethereum, though Ethereum is looking to move toward a proof-of-stake model.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin and traditional market risk assets remain under pressure as bond yields continue to rise on expectations of earlier and quicker rate hikes by the U.S. Federal Reserve, writes Coindesk's Amkar Gaboli. Notably, the 2-year Treasury yield, which tracks short-term interest rate and inflation expectations, hit a fresh 11-month high. Taking a look at this chart from the CME FedWatch tool, the Fed funds futures are pricing in a 93% chance of the central bank raising rates by 25 basis points in March. Policy tightening is bearish for asset prices in general, but some observers are of the opinion that the worst may be behind for Bitcoin. One Twitter user commenting, "I'm really surprised BTC is holding up while NASDAQ pukes." In retrospect, the Bitcoin sell-off led the NASDAQ, and looks like BTC has found its bottom already, while NASDAQ hasn't. While the NASDAQ index fell 2.6% on Tuesday, Bitcoin ended the day flat. The cryptocurrency has lost nearly 40% of its value since mid-November at its peak, as the Fed went from predicting a single rate hike in 2022 to 3 rate hikes. The tech-heavy NASDAQ peaked after mid-December and has declined over 8% since then, according to TradingView data. All right, that's just one view. Joining us now to discuss further is Coindesk Director of Professional Content, Galen Moore in Boston. Welcome, Galen. Always a pleasure. So, is the worst for Bitcoin over or not?
You know, I think there's a lot to look at that is that's pretty optimistic and positive in today's headlines, Christine. I mean, you were just talking about the Google Arnold Goldberg hire, right? I mean, look, this is super important. I mean, we look at this and it's a headline about Google and crypto, great. But to the rest of the world, this is a headline about Google changing its payment strategy, right? This is a huge area for Google today, and a huge potential area for Google in the future. It's a huge strategic announcement for Google, and in the same breath, they're talking about crypto. So look, I mean, I think for those of us who've been around a little while in crypto, we look back to past bear markets. 2018 to 2019 was the crypto winter and a season for crypto investors to build. The BIDL meme at that time was strong, and the building that happened led to the DeFi summer, right? Uniswap was built during that time, for example. So look, if this is another crypto winter, Christine, and I think, the jury is still out on that, who's building this time around? Add to the billions pouring into crypto venture capital, you've got tech giants investing and building, and ask yourself what could come out of that at the other end.
Okay, fair enough. But if we look at the GBTC discount, that has hit a new low. And GBTC is often used as a gauge for institutional players that want Bitcoin exposure. So what does this say about that? It's a different chart, folks. What does this say about the segment?
The other chart.
Are institutional investors laying off BTC or are just not interested in funds because there are other ways to get Bitcoin exposure, such as Bitcoin futures ETFs, spot ETFs in Canada and such?
Strong liquid spot markets. I think actually the GBTC discount really actually comes back to that question of how long, if there is going to be a crypto winter, how long? What's your time frame for investment in crypto? I think first of all, I think looking at it as a gauge of institutional interest or participation is a little bit misguided. Certainly, there are institutions that buy GBTC, but there are also retail investors, people who want exposure to Bitcoin via a tax-advantaged investment account, for example. They want to smash that buy button on their Schwab account. So it's not necessarily this measure of institutional demand. Still, I think you can take it as a fairly sensitive gauge for the likelihood of a U.S. spot ETF approval. Grayscale has made public their intention to convert GBTC into an ETF. When that happens, presumably the discount will collapse. So the GBTC discount implicitly represents a discount to net present value, taking into account the time the market believes it will take for a spot ETF to be approved. That's the 2% annual fee over that time. That is if you believe in efficient markets. I'm not super confident in my back of envelope math here, but I think if you believe the SEC will approve a spot Bitcoin ETF within the next decade, then at these discount numbers, which are, by the way, like near 27% today, after the market closed yesterday at 26.5%, GBTC is a pretty good investment.
So wait, you think chances are low for a spot ETF approval anytime soon? That's what I thought the analysts were suggesting.
I think at a 27% discount, the market is saying chances are low. If the market thought that a spot Bitcoin ETF would be approved next year, and presumably GBTC would convert into an ETF, and that discount would collapse, you would see money flooding into GBTC, and that discount would collapse. Right today, we would be much narrower today. That's not happening. So I think really what we're seeing here is Mr. Market is saying that the timeline for a Bitcoin spot ETF approval is longer than the market's timeline for a Bitcoin investment. Now, if you're a 10-year Bitcoin diamond hands hodler, I would say GBTC looks pretty good. But if you're thinking about Bitcoin as maybe an investment on a 1 or 2 year time horizon, maybe there are alternatives to GBTC that are certainly more attractive.
All right. Pivoting toward another story, Microsoft announced the other day that it's acquiring game publisher Activision Blizzard for about $69 billion. Activision is behind mega franchises like Call of Duty, World of Warcraft, and the acquisition is being widely seen as a big bet to keep Microsoft competitive in the nascent metaverse space. But Galen, you also think this is good for Bitcoin. Tell me why.
I do. Yeah, totally, Christine. So, look, Bitcoin and growth stocks have been moving in tandem recently. And, I always point out like a broken record that the correlation is far from strong. That's the market regime today. And look, I think, on another day when the NASDAQ is headed toward the red, we see the second largest company on the NASDAQ, Microsoft, continuing to make strong investments and bets. And I think basically, if you thought the NASDAQ was a good investment last year, these companies are still the sort of the situation hasn't changed. The fundamentals of investing in technology haven't changed. And so, to my view, if you think about the Bitcoin and growth stocks being correlated, again, we're looking at a time here where we're in a downturn. There's some uncertainty in the market. There's a lot of risk in the world. But internet technology has a long way to go. Microsoft has a long way to go. They're continuing to invest in the same playbook that brought them up to the number 2 position on the NASDAQ. I think it's obviously an opportunistic investment on their part with a company that was having some major troubles and issues in the press, and culturally, internally, right? You've got to look at that as a vote of confidence. And at the same time, with Bitcoin correlated and also with like the primary narrative driving crypto investment these days, not necessarily being Bitcoin, but being Web3, you've got to look at that as like a positive signal. This is still an area where strong fundamentals are happening, where investment is occurring. And, if you're thinking long term, maybe this is a good time to be building that position.
It's fascinating to see Web2 incumbents positioning themselves and preparing for Web3. So yes, it's very bullish for Bitcoin. Galen, thank you so much for your updates. Appreciate your insights. That was Coindesk Director of Professional Content, Galen Moore. Coming up, New York City Mayor Eric Adams wants to make the city a crypto hub. How's that coming along? Welcome back. There's a new mayor in town. After being sworn in earlier this month, New York City Mayor Eric Adams repeated to CNBC his intentions to make the city a Bitcoin and crypto hub, saying, "I want New York City to be the center of that technology." The mayor has pledged to take his first 3 paychecks in Bitcoin. His enthusiasm has encouraged crypto companies like Chainalysis and Ava Labs to stay in New York, according to Reuters. Joining us now to discuss is Muneeb Ali, co-founder of Stacks, a proof of transfer blockchain that runs parallel to the Bitcoin blockchain, and CEO of Hiro, which has helped develop NYC Coin. Hello there, Muneeb. So through Hiro, you've helped create Miami Coin, NYC Coin. Have you had a chance to talk to the mayor on his ambitions to make NYC a crypto hub?
Yeah, so I think Hiro is a dev tooling business, and all sorts of developers kind of like use the tooling, and any open source developers who kind of like work on these Miami Coin and other projects as well, they also use our tooling. I've come across the mayors in like some random meetings, but not a lot of kind of like direct discussions about their plans.
All right, stepping back then, many folks are in Miami for the North American Bitcoin Conference right now. They're hosting Bitcoin 2022 in April as well. They're in Miami. New York has the Bit license, and often it's seen as restricted for crypto companies to operate. But do you think, can New York ever catch up?
Yeah, I mean, that if there's like one request I could make to the mayor, that would be the first action should really be that putting some sort of effort behind getting rid of Bit license. I think that is one really old and clunky piece of legislation that is hurting a lot of New York crypto businesses. All
right. NYC Coin and Miami Coin have generated tens of millions of dollars for their respective cities. Can you give us an updated breakdown of what the numbers are?
Yeah, so I think all that information is public. So just like Bitcoin, there was like a mining only type of a launch for these efforts. And I think anyone can kind of like track what is the current status, because part of how the mining over here works is that there's a donation that automatically is made to a treasury for a city. So in terms of Mayor Shores, like he's very forward looking. He officially got a vote done at the local Miami government level to accept the treasury. And that's a very interesting thing for Bitcoin, because the treasury that Miami has is actually a Bitcoin yielding treasury. They can actually earn Bitcoin on that treasury. And Shores is actually kind of like pledging that Bitcoin to the citizens of Miami, and he's going to help onboard a lot of residents of Miami to Bitcoin through that, which is, I think, is an excellent outcome for everybody. In terms of the size of the treasury, I think maybe the last time I looked at the website, it was approaching like close to like $30 million or so.
Okay. And do you have numbers for NYC Coin, how much that may be generating for the city of New York?
I think the last time I checked, New York was probably even has probably a larger treasury than Miami, but I'll have to go back and double check. I'm not directly involved with these projects. Like these are community projects that are basically building in the ecosystem.
I wanted you to weigh in on the Web3 debate as well. Jack Dorsey and Elon Musk are calling it BS, basically, that it's not decentralized and it's increasingly controlled, becoming centralized by VC money. What are your thoughts?
I think it's like the classic glass half full and glass half empty type of a thing. I tend to focus more on the new capabilities that are being enabled by Web3 that were simply kind of like not possible in the Web2 world. And yes, if you kind of like start looking at some of the potential problems, there is a potential issue where some projects can get overly centralized, either through the way that token distributions were made or how much of the tokens were kind of like given to early investors at discounted rates and so on. So I think some of those issues are real, but I don't think those issues are what define Web3. I think Web3, the possibilities there and the possibilities of actually building an internet where users have much more control and users have much more options, I think the benefits are far greater than the attention that they're getting. And the issues are not something fundamental. I think those are things that people have made a bunch of improvements on, and they can actually keep improving on some of those issues.
Okay. I wonder if you could address some of the criticisms of Stacks as well. Some folks say that it is more centralized in terms of the ownership. Some people feel that it's misleading that Stacks associates itself with Bitcoin in marketing, that it advertises itself as smart contracts in Bitcoin, but the Stacks blockchain doesn't have any token representing Bitcoin yet. Any thoughts on that?
Yeah, so I think let me break that down a lot. So first of all, Stacks is the only blockchain that has a direct consensus with Bitcoin, right? So it's a cross-chain consensus. Stacks actually cannot exist without Bitcoin. So it's the only blockchain that has a direct cross-chain consensus with Bitcoin. You can actually interact with smart contracts just by doing Bitcoin transaction. And that is the most pure form of kind of like smart contracts that you can bring to Bitcoin, because nobody wants to change Bitcoin. Nobody wants to modify Bitcoin to actually change the Bitcoin base layer to introduce smart contracts. So it's basically the purest way of directly bringing smart contracts to Bitcoin, because you're turning simple BTC transactions. If let's say you want to use a lending application built through Stacks, you would just do a Bitcoin transaction, and your collateral would be living on a smart contract on the Stacks side, right? So in that way, like I think a lot of Bitcoin maximalists, sometimes they have issues with innovative new ideas, especially if the ideas involve like gas tokens and new types of assets. So I think that's where the criticism of like, hey, this is just marketing. This is hardcore technology built by computer scientists that is actually helping grow the Bitcoin economy. And it is by far the project that has the most amount of real traction, both with developers and users right now. If you look at like some of the numbers, like I think there are something like 120 monthly active developers on Stacks, and there are something like 680 monthly active developers in all of Bitcoin. And if you look at the number of applications, like the growth in the applications on Stacks is just phenomenal over the last year, and basically dwarfs anything else happening. Bitcoin is something I'm very proud of in the Stacks ecosystem.
All right, Muneeb, thanks for clearing it up. Appreciate you coming on the show. That was Hiro CEO Muneeb Ali, as well as co-founder of the Stacks project. That's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again at 3 o'clock in New York. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching Coindesk TV.